Hello, welcome to a podcast where I'm going to be looking at bad debts and bad debts recovered. This is actually quite a simple topic, but it leads on to something a little bit more difficult, which is provision for bad and doubtful debts. But that's for another day, so no need to worry about it at the moment. Okay, as normal, I've done your worksheets to go with this, but the first thing is to look through the examples. Bad debts itself, very, very simple topic. Looking at this example here, we've got 3 customers who owe a business some money: S. Akhtar, W. Akram and W. Yunus, and they're going to be declared bankrupt, so they're going to owe the business some money. So what we need to do, we need to transfer the amount each one owes the business from the individual customer's account into, in turn, something called a bad debt expense account. So Akhtar owed the business 300, we credit his account, we're no longer going to get that money, we debit bad debts. Same with Akram. Okay, Akram owed us 400, so we need to credit his account for 400. We need to debit the bad debt account for 400. And finally, Mr. Yunus. Okay, he owed us 350. We need to credit his account for 350, and we need to debit the bad debts account for the same amount. Total amount of debt that's being written off is therefore 1,050. And that appears in the income statement as an expense. So it goes in with all the other expenses, less expenses, no problem. Journal entries have just been asked in this question to do the one journal entry, and that's for Akhtar. So journal entry for Akhtar, or the bad debts account is being debited. So we need to make it clear that the bad debts account will get a debit entry. S. Akhtar's account has been credited, so we need to make it clear that there needs to be a credit entry in S. Akhtar's account. And we need to also have a commentary, don't miss an easy mark in an exam. Bad debt written off. No problem. Very similar question on the worksheet. Shockingly similar. Probably doesn't use cricketers' names. Yes, it does. Okay, but what we're also going to do is we're going to have a look at a slightly more difficult bad debts question, where somebody's been able to pay us part of the debt and the rest of it's being written off. So with this one, we've got an opening balance that somebody called Rob Page owed the business. And what Rob Page has been able to do is been able to pay $100 of that, but that's it. The rest of it is going to get written off. So, got the $100, we credit Rob Page's account and we debit the bank because we've received some money and therefore gained an asset. And we need to credit his account for the remaining 300, and that will appear in the bad debts account. And don't forget, in an exam question, because the account is now balanced off, just put the totals in, because that's normally worth an extra mark. Okay, journal entries, very, very simple. In the bank account, we've put a debit in of 100. In the bad debts account, we put a debit entry in of 300. Don't forget, and in the Rob Page account, in total, we've put credit entries in for 400. Don't forget that, because this is where some people sometimes get confused, although we've written here that we debit bank, the details in the bank column will be the other account still that we find the opposite entry in. So we've debited the bank, that will tell me where I will find the credit entry that matches it. Okay, and then the journal entry needs to have a quick commentary, and I've put a quick commentary in there. Okay, having got the first 2 questions in here, I will give a bonus mark out to anybody who knows the links between question 2 and the second question on the bad debts example. And then come back and just go with bad debts recovered. Welcome back, bad debts recovered. Okay, T&I Engineering wrote off $750 from another company called NOT Reliable. And they did this on the 5th of June 2014. But on the 5th of June, it's found that Not Reliable is still trading and they've actually got some money. So the business would go back to them and tell them that they owed this money. And what we would then do, because we're now going to get paid by Not Reliable, we open a bad debts recovered account, which is an income account, and therefore it goes on the credit side. That's going to make the business better off. You might think that we make the entry straight into the bank account, but we don't do that. What we need to do, a business wants to see a record of how another business has traded with them, and they want to know that Not Reliable has owed them some money. So the first thing we do, we resurrect Not Reliable's account, and we actually make the debit entry in Not Reliable's account. So it looks now like Not Reliable owes the business some money. But he doesn't, because he then gives us a check. So we need to credit his account because he no longer owes us that $750. And at that point, we're going to debit the bank account. So looking at the journal entries, just looking through them in their logical order. We've debited Not Reliable, credited bad debts recovered, and then we've debited bank and credited Not Reliable because the money's actually been received. And this is slightly different when it appears in the income statement. In the income statement, have your gross profit figure and bad debts recovered go in as an add additional income. Right guys, you've got the third question to have a go at. I forgot to do it at the moment, but I won't do straight after I finish the video. I'll also put in there your feedback so that you can tell me which bits of this topic you do and don't understand. Good luck. I'm looking forward to receiving some excellent answers. Bye.